Good morning. Predicted Trades family. How we doing? Hopefully everybody had a great weekend. Going to just go ahead and get started here, trying to knock out prep early today. And maybe moving forward, we'll get started a little earlier. First, let's take a look at our economic calendar. Morning, Bob. Thanks for tuning in. So we have just a little bit of economic data coming out today. Core capital goods, durable goods. Tomorrow. Basically every day this week we have a little bit of economic data coming out. And then Wednesday we have some GDP. We have Powell speaking at 9 a.m. on Wednesday. We have some, random Fed presidents speaking throughout the week. And then Thursday and Friday are kind of the big economic data days. On Thursday, we'll be getting a lot of inflation figures coming out. Hopefully they confirm what we saw last week from University of Michigan inflation numbers, that we might be seeing the numbers come down a little bit. So hopefully we see that again on Thursday. We could technically maybe even run into Thursday, and then depending on how that data looks, we could even, see a reversal back down or whatever. So Thursday pretty big on inflation data. I mean, look, there's like a dozen things dropping at 8:30, including jobless claims. Friday we have PMI. A little after the bell. We have that holiday on Monday. Independence Day, So next week will be a shortened week. We have non-farm payroll, NFP next Friday, with unemployment. And the week after that should be FOMC, I would think. June. Oh, that's last one. I was looking for the next week of July. Anyway. So this week we have a little something every day that, could affect our open, with the big ones being Thursday and Friday. Now let's dig into the market. Overall, I like to kind of go back and see where we're at on the year once we get a reversion to the mean. So we had our, all-time high right after the first of the year. Started to come back from that. And let me throw on the moving averages. Go. After we made that new high, we started falling below moving averages back to the 200, which is the yellow one. We got back above it just to set in a lower high, and then we rejected the 200 and started the real sell-off, making that H. at H being right at about 4,100. We fought back above that to try to get to the 50, but 4,100 to 4,200 proved to be quite a struggle. Sent us back down to key levels, which we have now bounced at and gotten back to the mean. At this point, once we are above the mean with the daily 50, this purple one above, the overall goal right now, or mission, is to get back to the daily 50. Getting to the 21 is kind of just the first step. That's the average, right? Now we have to start pushing back above the longer time frame averages. The 200 is nestling in at 4,400. And the daily 50 is nestling in right around 4050. So just looking at how can this week go, we can push off of this 21 and 15, that 3,900, 3,875. We might come back to test that while they take some profit and load up for further continuation. If we start to lose those in the daily 8, which is nestled into this zone now, if we start to lose those, we would be kind of giving up the uptrend and we would come back to test support, right? So as long as we can push off of this zone with the 21 and the 15. And how interesting, right, as they start to cross over is when we get our push over the mean. Sometimes those crosses can be magnets themselves. So if we can stay above and push off of the 21, it's mission 3950, where we have some key levels. If we can get above that and push off of that zone, it's back to the daily 50 through psychological 4,000, back at 4050 where we have our next zone and key levels. From there, it'd be mission 4,100, 4,200, but that is going to be a difficult mission. That's where we consolidated last time. We rejected a tap of 4,200 overnight and never really got back to test it. Another likely scenario, since we have arrived back above the 21 with the 15 and the 8 below that, we can just slip back to those and go sideways. Something we should be prepared for leading into a holiday weekend, right? Like we have a full week this week, but we are going to be leading into a holiday, 3-day weekend, and a shortened week next. So we'll see. They could send us sideways for a little bit, ramp up near the end of the week. We'll have to see what we get. So we've got our upside targets. 3950, psychological 4,000, and then 4050 where the daily 50 is. We've got our downside targets should we start to give out the moving averages that we just got above. And we can just go sideways. So need to be prepared for all those scenarios. And it's worth like going back and noting how each reversion to the mean has gone. We can get above it to tag the one above, and then we dump the mean, the 21, the white line. We can fight back to it and dump it immediately. We can fight back to it, not even make it, and dump immediately. We can get above it and then go sideways, never making it to the 50. And then when we give them out, it's a hard reversal. So now we have fought back above them. Let's see if it's a sideways move, if it's a quick push higher, which there is an example of that. yeah, we get back to the mean here, and we just keep on pushing higher and higher. So, you know, it's worth going back and looking at what does it look like when we get to the mean and then just keep moving. When we get to it and struggle and consolidate right above it, or when we get to it and reject, right? So that you know what it looks like. One thing I also like to check is our moving averages on different time frames. We know our dailies and where they sit. Obviously, with the big push that we had last week. Come on, show my moving averages. There we go. With the big push that we had last week, we got above the moving averages. Wish there was a way to maximize this on the screen. There we go. It's a little better. So last week we were in the mission of getting back to our moving averages. The main ones for me being the 21 and 45 when we're looking at lower time frames and trend. So last week we fought to get back, and here I'll just turn Beast off. Oh, I love it when toss takes that long to do something. There we go. So last week it was the fight back to those moving averages and then reclaiming and then taking off. Now they're all stacked bullish on a 4-hour, and from that, every time frame beneath that will be bullish. So we keep an eye on where they're at during pullbacks to gauge continuation. The 8 on a 4-hour is at 38.95. So like when we say we could have a pullback to 3,900 where the 21 sits, we also have the 4-hour 8 right below that. Right about here. So we could dip just to those two and then take off again. Let's see, the 21 on the 4-hour is pretty far below at 36. So that'd be dipping below the daily 8. So not much of a worry. And then I also like to look, at a bunch of different time frames. You can see that like on a 15-minute on Friday, we were holding, and we just pushed right off of them. So we're, overnight now, we are bouncing at the 21 and trying to hold. We have some economic data coming out at 8:30, which might start to send us below the 15-minute 45, which could then send us to that 3,900 for a test, which would be back at the overnight low. And the area that we were consolidating under all day and then push through, support, we might go back to retest that support at 3,900. We can just as well dip down to the high right at around 3,920 and take off from there. Yeah. So if we start to lose 3,920, we're probably going straight to 3,900. If we start to lose that, 38.95, we can be going back to test 38.75, where the daily 15 is at. And all of that would still keep us bullish on, let's say, a 4-hour. Because the 21 itself is way down at 38.36. We'll be at 38.50. So we could even dip as low as that and still bounce and be bullish. So let's be ready this week for continuation, for consolidation. And, you know, a true rollover and rejection would be giving up all of Friday and then heading back below like 38.07. What held us down all week became support. Getting back and losing that support would be actually rolling over and selling back off to something like third Keltner's, right? Let's load up all of our normal stuff. There's not really going to be too many squeezes in place, except for maybe some overnight ones. Yeah, not much going on squeezes until you get to individual names where we probably have some dailies on some and some 30 minutes from the overnight. So yeah, we're on a nice trajectory to get up to the next zone and to try to get through that to 4,000, where that first Keltner up is. That first Keltner down starting to step up and get closer to that 38.07, so that would be a true rollback over to go get that third Keltner again, right? But I think we have some more upside to the market. All right, NQ, let's, ooh. There we go. 12,100, very big key level on NQ. You know, we got through the mean early on Friday, and then the big push was to get over that level. Just like on ES, it was to get above 3,900 and the 21. So, big key level, that 12,100, we might go back to retest it. If ES goes back to retest 3,900. As long as that holds and we stay above, there's going to, you know, I still see more upside. We have the first Keltner up at this 12,386. We've got the daily 50, almost down to our key level at this 12,458. So key levels above to try to get to, as long as we can stay above 12,100, and even going back to tap that fills the small gap up that we have going on. So above that, still looks good to the upside. If we lose that 12,100, it'll be probably a quick dip back to the daily 21. We can even get to say that daily 8 and technically not be completely engulfing Friday. So we've got some key liquidity and support below. Let's see if they want to just keep buying after a little profit taking on that gap up, with a mission to get back to the daily 50 above. And I believe the 200 is still so far above. It's, yeah, pretty far up there, like 2,000 points. So not any concern at the moment. So let's see if we can get back to that daily 50. Technically, it could, I think, get there today. Yeah, it could technically get there today. Alrighty. Making it back to the 21 this morning. Didn't quite get there on Friday. So now that it is above the 15 and the 21, let's see if that continues to hold it up. It does have a little 30-minute squeeze that just started. And those two liquidity levels kind of cut right through that 30-minute squeeze. Should we start to lose those and head back over, or roll back over, we've got a squeeze bottom of that 1750, but it's likely back to the daily 8. If it's doing that, the market's probably going to do the same as well. So keep an eye on it. Might be an early indication. YM. Yeah, technically NQ leading to the upside right now. YM coming up on a key level 31,800 above the daily 21, and its daily 50 is still up at 32,400. So we'd have to get through that psychological 32,000. First Keltner up at 32,150 to get back to that 32,400. Close around 31,400. So maybe like a 2-day journey if YM is going to get back to the daily 50. Would also like to see it stay above 31,000, where the daily 8 sits, if we do have a little profit taking and pull back. Below the daily 8, we're starting to reject our moving averages and can head back down. Apple. Apple, it was a fight to get back to this zone, right? And even on Thursday, we pushed to the zone, pulled back to the daily 8, pushed to the zone, then we gap above. It is support to push on further. Excuse me. Next key level, 144.5, where the first Keltner is now coming down to. It could likely actually be right on top of it today. So let's see if Apple holds the gap and heads right on up to the key level in daily Keltner, or if we come back to test 142, if we start to give that out, it could be a dip back to 140 and the daily 21. You know, Apple had a nice push, and then it just sat, and then another nice push. We are, I always have to go double check these. So we had kind of a tighter trend line that was holding us down that we got through. We're about to arrive at the trend line from kind of more the extreme highs of the year. And it looks like if we actually get to that 144 and a half, 145, if we actually get to those, we'll be reaching outside of this trend line. So it needs to hold if we get above 144. If that starts to get out, we are rejecting trend line from all of the highs of the year, which could send us back to this key zone. So that's something to definitely watch on Apple. You know, basically connected some highs here, here, not this one because it just went through and then right back down. Connected here. These recent ones didn't even quite get there. So now we're about to test it for the first time since, let's see, early May. AMD. Oh, I meant to go with this one. There we go. AMD. Finally did wake up on Friday because the entire market was ripping so hard. We do have MU earnings this week. So again, even though chips did move with the market and we're starting to fire some squeezes, AMD could, chips could still go sideways while they wait for MU earnings. And let me just double check. I can check our earnings channel in our server to see that MU is on Thursday after close. So chips could do not much this week. Just something to keep in mind. But let's see, key levels we've got the daily 21 and the daily 15 aligning perfectly with key levels above. So let's see if AMD wants to continue pushing off of this 87.9, let's call it. Looks like it's an old POC. We can push through that, and 90 to get back to this zone above. Yeah, I mean, should it start to lose it, we're rolling back to these key levels below. Amazon, nicely above the 21 and 15. Almost at that first Keltner up. Almost to 120 in the daily 50. So relative strength-wise, you know, AMD's not even to its daily 21. Amazon's pushed through, and it's almost back to its daily 50. So relative strength. They are buying up Amazon at this new low discount price. Let's see if it can continue up to that 120. Get above the daily 50. When we have a 2-day squeeze top up at 128, right by that third Keltner. But we can't always just, on the market and everything, just fade back to daily moving averages and sit and consolidate. So, something to keep an eye on. The 21 is back at that 112, which was kind of the number that held us down all week, 110 to 112. Then we got through it on Friday, so already looking decently strong on the gap up pre-market. Last week we talked about BA needing to stay above its daily moving averages. It did for the most part all week, only slipping on Thursday a little bit, but then right back to them, capping above them, pushing off. So great gauge there on BA, and almost back to the daily 21. So relative strength as well. We do have a 2-day squeeze top up at 146 to keep an eye on if we can get above the daily 50 and test that 145, 146 zone. Cat definitely took a break and did not move up with everything else on the market. You know, it bounced off the third Keltner down on Friday, so they're taking a break on Cat themselves. Looks like their earnings are, come on, toss. The end of July, so not a real focus right now. Let's let it get back to this 193, the daily 8, and then it'd be a better play to go from the daily 8 back to the 21. Google, Google, Google. Google has the catalyst of the split coming. One of the last large names to split. And I know Tesla is, you know, at least scheduled to split, or likely to split in August. But technically it's split a couple of times, you know, in the last couple of years. So Google kind of one of the last big FANG powerhouses to split. Already almost to that 2400. Those 2300s on Friday were a huge explosive play for folks in the room. Off of Beast at like $3. I think they went to 30 or 35 for a 10x. So, relative strength, Google's already back above the daily 50 and pushing nicely. We have second Keltner at 2400, third Keltner at 2475, 2500 we can call it. And we do have just a daily, 2-day squeeze up there as well. So, the daily's right underneath it. There it is. It's that thin one. So let's see. Google a couple of weeks until it's split, mid-July. It can just keep trucking, start pushing into this 2-day squeeze where it will slow down. But it can grind against it and make a 2-day squeeze fire to the upside. We have the daily 200 up at 26.75. So let's just see. Maybe Google 3000 by split time. But overall, relative strength on Google pretty good. Let's see if they just want to keep on trucking or take a little bit of profit and go sideways. Allowing things to get cheaper before the next big push on Google. You know, we had a big push to start the week and then just consolidated until the end of the week where it made an enormous move with the market. But Google's starting to look like the leader that it was last year. So let's see if they continue into the split. For today and this week, going to be watching the 2400s, 2450s, 2500s. Would not mind a little dip back to the highs from Friday. Maybe even to the daily 50 at 2300 just to shake some folks out and get some good discount on these contracts up at the top of the squeeze. All right, GS. So I was saying last week, banks look weak. We really need them to start to catch up and play ball for the market to complete the reversion to the mean. So on Friday, we got that. Now we're back above the mean, all in one day. She got back through the 8, 15, and 21. And looking strong, like they're going to rotate into some finance here. We do have their earnings mid-July. So yeah, we could see some bank rotation in early July and in late June as we get ready for bank earnings before big tech at the end of July. So let's see if GS wants to have a dip to 300 for a retest of some of the highs on Friday and maybe even the 21, which will be stepping up to 300. Or if it wants to just gap and go and keep trucking up to the daily 50 up at 310. So magnets above and starting to wake up. Let's see if they keep up the rotation into finance. JPM on the 14th. So really just a couple of weeks. Just getting up to the top of its squeeze and on just over the daily 8. Still has the 21 and 15 above and stacked. Starting to cross, so could be a magnet to get back to 120 if they continue to rotate into finance. On Meta. Okay, well, back above the daily 8, starting to arrive at the daily 15 and 21. So kind of lagging, at least XLC and tech. Let's see if we can get back above the 21 and try to start the journey back to the daily 50 at 190. But when names are lagging and others are leading, I like to try to focus on the leaders because they are rotating into it, while laggers just kind of get drug along. So I'm not going to have a huge focus on Meta. I'd rather focus on Google for the next couple of weeks. Microsoft, back above the 21, back above the 50. So that makes Amazon, Google, and Microsoft back above the 50s. Should she start to give out and lose at 50 and that Keltner in, I guess, pretty much 266, those first highs on Friday. Then we could be seeing a pullback to the daily 21 back at 260. But as long as we can stay north of that 266 and that daily 50, Microsoft can keep on leading and trucking to the upside. 275, 285, where that 2-day squeeze top sits. So Google and Microsoft have that 2-day squeeze up there. Well, if they keep pushing off the daily 50. Netflix, back above the 21. We've got the 50 right above 200 psychological level. So that's the magnet right now. 200, 202. Definitely be watching those contracts. And we do have that 2-day squeeze up at 210. So it looks like they're starting to give Netflix some love again. NVIDIA looking a little better than AMD, right? Already above its 21 and 15. We have the daily 50 up at 182 with that Keltner at like 181, 180. So that's the mission to get to 180, 181. But we could, again, see chips just come back and consolidate at these moving averages, waiting for Micron to report on Thursday. QQQ. Nice steady uptrend in channel after getting through the 21. So maybe worth drawing a channel. If it starts to give out that channel and this little dip that we just had, then we can come back to the daily 21 to consolidate. So opening around 296, going to be watching 295s, 292s, 290s. But if we can continue this channel and this trend and stay above 294, going to be watching the 298s, 300s, and 305s, maybe later in the week to get back to the 50. Technically closing at 294. We could get up. It's slightly over an ATR to get to the 50, so maybe it's a 2-day journey. But we can get through 300 a day easily. Get up to about 303, 304. So, just a hair past an ATR. I could get done in a day to get back to the 50. Roku above the 50 on Friday and still was strong. It did come back, but then slow grind up. So, definite rotation into Roku lately. We're about to hit a daily squeeze top and a 2-day squeeze right above that. So she can keep trucking up to 105, maybe even 110, but then might start to take a break. Shop. We're going to have that split tomorrow after the bell, I believe it is. Yep, tomorrow after the bell. So let's see if on the last day they want to keep on trucking. Obvious target 400, that daily 50. I'm getting back to 420 psychological fun level. And that 2-day is up at 450. Closed at 385, 30.8 TR. That first squeeze and Keltner, second Keltner above are kind of an ATR away from where we closed. So, we could see 420 today. And if they really want to go crazy, they could get a 2 ATR day out of her just to lead in. They have been buying leading in. So, last day, let's see, maybe there's some rotation into shop. Snow. We're going to cover her again because she has relative strength back above the daily 50. Already above this daily squeeze. But she is already at second Keltner with third right above. But she got some upgrades last week from JP Morgan, which made her strong every day. pops every morning, fades, and then grinds up. And also, if market's going to roll back, snow's not necessarily a leader, so we could get an interesting drop out of her back to these moving averages if the market starts to roll. SPX. So we completely filled this old gap. If we go look. This last sell-off that we had left two big gaps behind. We filled one of those. So that's why I let it stop on Friday. We still have that next gap above from 39.75 to about 40.20. And let's see, we're set to open around 39.30-ish, where we have a key zone. So let's see how it goes at this key zone on SPX. It might, we're going to be opening near it, and we might resist it to fill the gap real quick, maybe even test the 21, which would be stepping up, likely to 39.05-ish. So let's see if this zone is resistance for a quick gap fill before heading higher. Once we get above 39.40, we can make a push right to 39.80 where this gap starts. We have to get through psychological 4,000 and to 40.20 to completely fill that gap. We also left a gap behind. There we go. So we've got our uptrend from lows. We've got a gap zone that could be support, just like this one that we also left behind was support and never got filled. So let's see if this is resistance that sends us back through the daily moving averages to the daily 8 trend line and gap support. As long as we stay above these items, still looking for upside to get back and fill this gap and get to that daily 50 at 40,050. If this gives out in this zone, we can roll back over to the lows in that third Keltner again. SPY. Pushing above 390, filled that gap. But I'll leave it just for today, maybe this week, just to see if 390, 389 and a half, let's call it, continues to be support. If we have a little dip there, with the mission to get back to 395 and the first Keltner at 400 and the daily 50 at 405. Just like on ES and SPX, we need to get to 40.50 to get to the daily 50. Tesla. Strong every day. Last week, even dips would get bought right back up. Even if they dipped again, they get bought right back up. Tesla back above that 744. Our third Keltner is way up at 850. Daily 200 at about 900. Daily 50 at 790. So, if we can continue to hold 744, we can have a good push up to 780 with the goal to get back to that daily 50 at around 790. Might even be as at the 787 today, the way it's stepping down. So if we can hold 744, could get a nice push on continuation up to key levels, top of squeeze, daily 50. Then we could see Tesla potentially take a break and come back. Should we start to give out 744 and 735? Then it could be a quick drop back to 718. But let's see if the highs from Friday, the 744, can act as support to get that continuation and get up to this daily squeeze top where the 50 sits. And VIX. Steady downtrend. Gave out its daily moving averages. VIX is gapping up with everything and back above the 28. Let's see if these daily moving averages are magnets that it wants to go test now that it is below them, where we would want to see rejection and heading back through Friday's lows around 27. So we got through moving averages. We are back, likely going to pop up and test them, so we might get a little gap fill, but looking for those to reject and send us lower through 27 and down through first Keltner on our way to the 200 again, which has now stepped up pretty close to those recent lows we had and above that 2333 key level. So we might just be ready for VIX to come down and test squeeze bottom and 200. We did not get it last time around on the last few pops and reversion to the means. We have to go back as far as April 20th for the last time we actually dipped below the 200 on VIX. Well, that wraps up prep. Hopefully this is helpful for everybody. The Bees tools have already been dropped, so you can start loading them up, getting ready for the day, which is what I'm going to go do. Thanks for tuning in. We'll see you in chat today.